So often in here we see a lot of data about the S&P 500, and I thought, well, what about the NASDAQ index? How come we don't talk about that too much? And what's their performance been? And should be the NASDAQ index be considered in some portfolios? So now let's run some disclaimers and get into some observations I have today. So first I thought I'd start with my data and then we'll look at some data from the internet. So putting this up first, I have a spreadsheet that I keep with S&P performance, NASDAQ performance, bond performance. And this is these are different performance periods of the NASDAQ versus, the S&P versus the NASDAQ is how I should say it, because I lead with the S&P. And the S&P 500 has had a better return over the marking period than the NASDAQ. The lines will be ahead of 0%. And if the NASDAQ has had better performance, the lines will be lower than 0% again. It's the S&P minus the NASDAQ. So if the S&P did 10 and the NASDAQ did 12, S&P 10 minus NASDAQ 12 is negative 2. So it's below the line for that marking period. That's why negative numbers here are below the 0 line or in favor of NASDAQ. Now this is a busy chart. So let me just orient you real quick. We have 1-year returns, 5-year, 10-year, 20, 30-year returns. And starting one by one, let's just start with 1-year performance to begin. And for any 1 year, again, above the 0 marker, above the 0 line, is the S&P has had better performance for that 1 year, 1 year rolling period. And if it's below the line, NASDAQ. And this is a toss-up on this chart if you ask me. And again, another thing I should mention is the rolling 1 year period is, this data starts in January of 1985. A rolling 1 year period is January 85 to January of 86. February of 85 to February of 86. And then a rolling 5-year period would be January of 85 to January of 90. March of 85 to March of 90. You follow a 10-year period would be April of 1990 to April of the year 2000. Rolling 5-year, rolling 10-year periods. And there's many of these rolling periods in a 40-year period. So the NASDAQ data I have goes back to 1985. The S&P data I have goes back to 1950, but you have to match these up for similar marking periods. So we're starting here in 1985. So that's the 1-year results. If we look here for 5-year results, what would happen to my chart? There we go. If we look at 5-year results, this is quite interesting. The NASDAQ index had massive outperformance over the S&P for the 5 years ended towards the early 2000s. Well, that makes sense because the tech bubble burst in about March of 2000. So this is the extreme run-up of NASDAQ here, and then it's its pullback and crash, if you want to call it that, such that for some amount of time, it looks like rolling 5 years from the end of 2000, so from January of 2001, I'd say even stretching it out to the end of 2006, maybe 2007. So the rolling 5-year periods from 5 years ended any time in 2001 to 2006, 2007, maybe the S&P was ahead, but then NASDAQ pulls ahead again for rolling 5 years. Rolling 10 years have again, NASDAQ run up, a little bit of a decline, a recovery. And then for rolling 10 years, it's not too often that the S&P has had better rolling 10-year numbers versus the NASDAQ since 1985. 20-year numbers, the only time the S&P is ahead here is, looks like in the year 2020 at some point, maybe from a tech pullback from COVID or something like that. But generally for a 20-year period, it's ahead. And then for a 30-year period, it's ahead. So in no amount of rolling 30-year periods since the beginning of this data, 1985, from what I can tell, has the NASDAQ underperformed the S&P. So, why we don't include more NASDAQ investments generally in our portfolios, I'm not sure. Why don't you hear more YouTubes talking about the NASDAQ index, the NASDAQ index? Probably because in a pullback, the pullback of a NASDAQ index, so the NASDAQ index has probably been historically worse than the S&P. I'd have to figure out a way to get some data on that. I don't know one offhand. But to kind of validate me, let me change my camera here for a screen 2. Whoops, that's not the right way to do it. Me. All right, let's change the screens here properly. All right, so through this website, long-term trends, which I like to reference here to kind of, look, I keep stats here, you saw them on the spreadsheet, but this is a little bit more slick because it's internet-based, and I've tested this gentleman's data against mine. So I generally believe we're pretty close, and you have the same graphical outcome here. What we have here is, get that down just one more. Well, it's the NASDAQ versus the S&P for different periods of time. And I've zoomed this to a 10-year time frame. What's a little bit tough for you to see is that the 10-year time frame is toggled by this. So this is for the most recent 10 years. And as I slide this back, we can see different 10-year time frames. I guess this is good. The NASDAQ index is the black line. The S&P is the red line. That says 2010 and that says 2020. So for the 10 years from 2010 to 2020, we can see how the NASDAQ is ahead of the S&P. The most recent 15-year period as well. But let's see if we can go back to a point in time where the S&P for 10 years was ahead of the NASDAQ. Now let me cheat. On my other screen, I'm going back to my data to see when I think those 10-year periods were. And here it's a 10 years ended in about 2011. So here's 10 years ended about 20. Oh gosh, it's so brief. Look at that. Maybe right here. That says S&P down 10.3, NASDAQ down 11.3. So only because the NASDAQ pulled back more than the S&P was the S&P outperforming the NASDAQ. And as I've been doing these videos, that's kind of an observation I've been making. It's kind of when the higher returning asset class has more severe underperformance, does the second asset class show better performance. So it's not that it went up when something went down. It's that both these indices went down, and in this case, the S&P went down less over this time period. So it's not when it only outperformed on a relative basis. It didn't go up in absolute terms. It just didn't do as bad. Sometimes that's a tough answer to absorb or tough to invest through. It's just not fun. Let's just see there was no other 10-year period, but for 5 years, there are a handful of 5-year periods where the S&P outperformed the NASDAQ. Looking at my sheet again, 5 years ended mostly in the mid-2000s. So let's toggle this. This is 5 years, 2000 to 2005. And yeah, the S&P ahead for some amount of time, but then it quickly reverts back to, I know, for 5-year periods going forward. So then let me finish that thought. For 5 years going forward, the NASDAQ, which is black, seems to maintain its lead. So here's a period of time, again, ending. Can we get where this is positive? I guess not. So here's a 5-year period ending roughly at the end of 2005, where you can see the S&P is ahead of the NASDAQ, again, only because it didn't drop as much. So that's the 5-year period ending 2005. Using this mechanism, let's stretch this out to the 10-year period ending, that's the end of 2007. The NASDAQ has generally caught up from, call it 2000. Let's get that line right there back to 2000. All right, so here's January 2005. and or January 95 for 10 years ended. Well, I want it 10-year period too. The toggles. Let's go to year 2000. I'm trying to get this to toggle to a time frame just to make a point. I mean, all right. Here's the call it bursting of the tech bubble. We got May 2000 on the screen. Can I just get back to our March of 2000? We'll equalize these. Even get that to the NASDAQ peak. All right, so here's kind of the peak of the NASDAQ. It starts to drop March of 2000. The S&P is way ahead. And the S&P maintains its lead from March of 2000 until that black line comes back across. I mean, let's call it, it's not precise, let's call it here. And this is, and that line is at 2021. Wow, it took 20 years from the peak of the NASDAQ to get back to where it had produced better results than the S&P. And then it kind of peters along, but even now it's still, since that pullback in 2000, that says plus 333 for, well, the S&P is ahead there. Where's the NASDAQ? That's tough. From that pullback in 2000, look at that, the NASDAQ has had a tough time getting ahead of the S&P since that pullback in the year 2000, although it's a 20, what did I do that? A 20-year period. Let's look at it on my sheet again. Do I have any 20-year periods? Yeah, okay. So let's go back to my sheet. I mean, it happens here. I can prove that it did happen whereby, since the year 2000, the NASDAQ has struggled to get ahead of the S&P. So again, let's go to March of 2000. Get this. This is March of 2000 here. So let's get that data lined up. March of 2000, okay? Everything's here. Here's March of 2000. And from March of 2000 through today, the S&P is still ahead of the NASDAQ. There was a slight amount of time the NASDAQ may have been ahead of the S&P. It looks like it's here. And that is February of 2021. And then what's interesting, if you go back to my data, so display 2, again, my data here, these are rolling 20-year periods. For a 20-year period ending in somewhere in 2020, again, that's where the S&P is ahead of the NASDAQ, not only because the NASDAQ had such a decline from the year 2000, but then if we keep going, just let time go on. Let time go on. Or actually, not let time go on, but let's put these to 20-year periods where here's 20 years from, again, about March of 2000, right? Where for 20 years, the S&P is ahead of the NASDAQ. But for the 20 years ended 2005 to 2025, the NASDAQ's ahead. I mean, the flip-flopping of that it's tough to predict, right? Very tough to predict. But, whereby I think the NASDAQ is a genuine index, or I mean, it's a bona fide investment solution. It can produce superior results to the S&P, but it's not a given. It seems to occur from time to time. It could be when you buy it, when you sell it. I mean, it's something that I mix into portfolios for the more growth to aggressive growth accounts for the investor. But I just thought it might be interesting to see, the S&P versus the NASDAQ. My data goes back to, he's got more data than me. I only went back to 1985. And per his sheet, if I start his sheet in 1985, just curious about this before I go. If I start his sheet, I guess the best thing to do is a 5-year, take him back to 85, which is that January of 85. You can see it right there. So I need to toggle just a little bit forward. Too far. January of 85 through now, the NASDAQ has trounced the S&P. Excuse me, I should put that sheet up. January of 85 through now, the NASDAQ has trounced the S&P. His data goes back to 1970, considerably higher, but not a lot of us invest from 1970 to 2025. That's just such a long amount of time. I mean, I think 20-year periods are fair. I think that 25-year period from 2000 to now is a fair marking period. 50 years is just unfair for human life expectancy, honestly, sorry to say. But yeah, it's just very interesting. I do think that the NASDAQ index could have a place in portfolios. I mean, I do use it, but just don't see a lot of videos here. There's videos here where, oh, put all your money in the S&P 500 and let it ride and look at all these great things. I'm surprised YouTubers haven't picked up on, the history of the NASDAQ since the beginning of time. A lot of professional portfolio managers don't mix it in because it's so tech heavy, but I really do feel it has a place and we can prove it. But from time to time it will underperform and from time to time it will outperform. So you just sort of have to be informed going in as to what potential outcomes might be. But hopefully you found this helpful and see you back here at some point.